Thanks for staying tuned. Now to Ivory Coast. In recent years, terrorism has weakened the tourism industry in Africa, causing severe economic losses to some countries. Ivory Coast has equally been affected, but it isn't giving up on tourism. The sector represents 4.8% of the country's GDP with a target of 7% by 2020. More tourists means more hotel accommodation. As such, Azalai Hotel Groups has taken a prominent role. Have a look.
To make tourism a major pillar of the economy, the Ivorian government has been encouraging African entrepreneurs to take advantage of the conducive environment and invest in the sector. The World Bank estimates that the tourism sector now accounts for 8.8% of jobs worldwide and 4.5% of world investment. Many hotel franchises are looking towards Africa as demand is increasing to have more world-class hotels offering the same quality as in other parts of the world. The Azalai Hotel Group is one of such, expanding in West Africa with a new outlet in Abidjan. Security has become a sales bridge. It is the first selling point for a hotel structure like ours. Previously, it was the quality of service. It was internet. But now, safety comes first with the quality of service and the internet.
We
now have teams that are exclusively African skills that are managing our hotel. The tourism sector growth in Africa has quadrupled over the past 20 years. But according to the African Development Bank, challenges with intracontinental transport and high cost of doing business is impeding further growth.
The crisis in the Democratic Republic of Congo is not just political, it's also economic. Behind an unstable political situation emerges a dark financial horizon. The collapse in the mining sector, tax evasion, unstable exchange rates, and misappropriation of public funds is leaving the public coffers weak. Serge Patrick Mankou and Hélène Wangalwa with the inside story.
The economic indicators of the Democratic Republic of Congo show the country is in the red. The country, which is the world's fifth largest copper producer and the first in cobalt production, has been hit hard by a fall in commodity prices. A ton of copper fell below the $5,000 mark in 2015 compared to $8,000 3 years earlier. Faced with the downturn in prices, some mining companies such as Anglo-Swiss mining giant Glencore have suspended their operations. Others are still operating but have significantly cut down their capacity. Kambuve mining site, which is located 25 kilometers from Likasi, for example, is only producing 20,000 tons of copper compared with 450,000 tons at the end of the 1980s. Not surprising, the downturn has had an effect on the job sector. According to the latest report published by the Federation of Congo Enterprises, more than 13,000 people have been laid off. The mining sector is key to DRC's economy and accounts for nearly 95% of its export earnings. Revenue from the sector has declined from $9 billion in 2015 to $6 billion in 2016. Since June, the Congolese franc has lost more than 30% of its value against the greenback as inflation continues to rise. Congo's central bank expects economic growth to slow to 2.5% this year, well below the growth of 7.7% recorded between 2010 and 2015 before the commodities market collapsed. Authorities are now keen to enhance diversification and reduce dependence on raw materials. Analysts, however, say the country must restore investor confidence, who they say have been pushed out by changes of laws and imposition of new taxes. Beside the economic woes, the political crisis caused by President Joseph Kabila's extension beyond his term threatens recovery. DRC is struggling to implement the New Year's Eve agreement, which is supposed to put an end to the political crisis that could have seen the country slide back to civil conflict.
And that does it for this week's edition. You can interact with us via our social media platforms, both in English and French. Join us again same time next week. Thanks and bye for now.